The one thing I know about stocks is that they say it's a free market.
We expanded, we grew, we're continuing to grow.
The market, which is the S&P 500.
I took an interest in the stock market, and even though I had very little money, I used those times to educate myself and learn more about investing.
The stock market is a vast online world with thousands of different companies. From stocks worth thousands of dollars a piece to even pennies. People make thousands and even millions from trading stocks. But what if you could be one of those people? I think you can be, but you gotta know how to trade the stock market. It's risky, but with the right strategy, you can make this happen. To be honest, a lot of people sleep on trading stocks. Don't know why, but it is what it is. But I'm here to tell you. I can show you how to trade the stock market step by step and make possibly thousands a month trading stocks at a small risk. You don't need to buy some lame course or take any online lessons from someone who just wants your money when you can learn how to trade right here. I'ma break down the market step by step and real simple for all my smooth brains out there. Before I get into it, let me go over some basics and concepts that you need to understand. The stock market is where shares of publicly traded companies are bought and sold. These shares represent ownership in a company, and the stock market provides a platform for buyers and sellers to trade these shares. The stock market is influenced by various factors such as economic conditions, political events, and company performance. One big example was the COVID-19 virus in 2020. The market took a big dump and dropped 15% in one day because people feared our economy was at risk of a decline for the long term due to expectations of an economic slowdown. So everyone sold a lot of their stocks, which brought the market down. So things can be unexpected. Just gotta be on point. Now that you understand what the market is, the first step in trading the stock market is to choose a brokerage platform. You gotta know where you're gonna invest your money, right? It's like an online bank account. This is where you'll have access to the stock market and be able to buy and sell stocks. You need to watch for the fees associated with buying and selling stocks. One famous platform is Robinhood, as Robinhood is famous for being able to trade with no associated fees. There are many other online brokerage platforms available, like Webull and TD Ameritrade, so you have plenty to choose from. Just be sure to choose one that suits your needs and budget. Now, the second step, and probably the most lengthy, let's talk about how to choose which stocks to trade. This is a very important step because without this step, you are guaranteed to lose money and be poor for your entire life. Unless you're lucky, the first thing to look at is the company's financial performance. This includes their revenue, earnings, and profit margin. You want to invest in a company that is financially stable and has a positive outlook for future growth. It's a key indicator that the company is healthy, stable, and can withstand economic challenges. Look at stocks like Apple, Amazon, and Microsoft. They are the top of the crop of the most traded stocks. People are very confident in investing in their stock because the risk is a lot lower versus a brand new random company whose future is unknown. A stock like VRM or VROOM, a lot of people are not confident in investing, so they sell it off, which explains why at this moment it's only worth 50 cents per share. Yeah, not a good sign at all. Things like price to earnings ratio is something to look at, as a low PE ratio can mean a undervaluation and a high PE can indicate a overvaluation. A negative PE ratio most likely indicates the company is losing money. So you need to be very careful. I also consider looking at management, how long has the company had their CEO, how they handle economic challenges, and company advertising. It's not as important, but something to look at. Volatility is a big one. Look at the company's stock price movement. Look for stocks that have shown consistent growth over time. Check out the 5-year and max years the company has been listed and see how the graph correlates with success. An incline indicates growth and a declining graph indicates poor growth. Third step, the actual process of trading. You've already done the research, so make a plan. This includes deciding on which stocks to buy, the amount of money you want to invest, and the duration of your investment. It's important to have a clear plan in place to avoid making impulsive decisions that could result in losses. A rule of thumb is only invest what you can afford to lose. Day trading is the quickest way to invest, but it also requires the most research and analysis, as you'd be buying and selling the same day. Long-term trading is the longest, but but you're betting on the future. So as long as you believe in the company, you will profit from growth and won't have to do daily research and analysis. Number 4, once you have a plan in place, it's time to place your trade. This involves entering the number of shares you want to buy and the price at which you want to buy them. One big thing you want to watch out for is volatility. Volatility is basically how quickly a stock's price fluctuates. Low volatility can mean lower risk, but with a lower reward, whereas high volatility can mean a higher reward, but a higher risk. Measure your risk tolerance and see what works best for you. I recommend low volatility for beginners. Now, the 5th step is using technical analysis. What you want to do is look at a stock's past performance chart and use TA to detect patterns or trends in how the stock's price has moved before. Traders use tools like RSI, which is one indicator to indicate if a stock is oversold or overbought. Moving averages is also another indicator. A stock that moves past a moving average upward could indicate a future increase in price, and it's vice versa the other way around. There are many more, but for this video, we will keep it brief. You want to watch the graphs and make your resistance and support lines based on past performance. Stocks are always risky, but using history can work towards your advantage. Using TA can help you identify when to enter and exit your trades to make profit. Now keep in mind, TA is not a guaranteed method, and other factors also impact stock prices. Do your due diligence. So now that you have a basic understanding of stocks, let me give you a visual representation of what a good trade looks like. Take a look at Albemarle stock, which I've personally made a $2,100 profit on. This is a company that's invested in lithium mining. If you do the research, you'd know that most countries are shifting towards EV vehicles, which in turn need to use lithium for batteries. So the future is there. Then you'd look at the graph, it's down over 50% for the year, down from $200 highs. This is a steal. If people need lithium for cars and the demand is always there, then this is just an overreaction. A perfect time when you can profit easily. When it dropped to 2017 levels and we're trading at 110s, perfect time to buy. The best strategy would be to hold midterm or swing trading, and voila, it had shot back past 130. Whenever there's projected future growth and demand in a company, there will always be a bounce back from a pullback, which is where you'd come in. Do your analyses and things will get easier for you. The last and final step, which is one of the most important, is keeping track of your successes and failures. What I've always done is create a trading journal. This can help you identify patterns and refine your strategy for future trades, and also help you understand where you went wrong. You can learn from all of your mistakes and become better and better with play. Get in the comments and let me know what's your favorite stock to trade, how you've done trading, and also recommend any stocks that you'd want me to talk about more in depth. Thanks for watching, and we'll see you in the next video. I'm out.